Focus on keeping this nice, short, sharp, and digestible. There is also some seriously interesting information and clues, if you will, on whether or not this is a market bottom that we will get to in the end. So first off, we'll start with the Bitcoin chart on the 1 day. One candle equals 1 day, and this is Bitcoin Tether US Binance pair. The reason why this pair is my go-to is because if we click on this CoinGecko.com and we go to Bitcoin, and then we scroll down to markets, and then we look here at the top, BTC, USDT, and we go over to volume, 24-hour volume. So if we sort that, we can see that the 24-hour volume here absolutely, completely, and utterly exceeds any other 24-hour volume on any other competitive exchanges. So FTX, Coinbase Exchange, and a couple others that you might have heard of, Bybit. So BTC against the US dollar on Binance, one would argue, and one would definitely probably win that argument if you were to say that is the true price of Bitcoin. This is something that people don't talk about very often, but the true price of Bitcoin that gets followed by all the other pricing on the other exchanges, I would confidently say is BTC against the USDT pair on Binance. So that is what we're looking at right now. We are looking at Bitcoin / USDT. So Bitcoin against Tether US. What we see here right now is a attempt at a bottom. There are a few things going on we will cover first. If I were to extremely simplify technical analysis, I would narrow it down to these 4 things: trend, volatility, volume, and momentum, in that order, trend being a very clear first. So it doesn't take a genius to see that we are in a downtrend, but this, as you can see now, is trying to put in a bottom. There are many ways to approach technical analysis and ways to understand these trend, volatility, volume, and momentum by different indicators and different ways. For example, candlesticks, patterns, indicators, moving averages, etc. But we've only got a limited time. So I want to show you one thing that is quite obvious, and that is a descending triangle pattern that is occurring on Bitcoin itself. So if we move a trend line down like this, looking at the most important thing right here, trend, we will see multiple pivot points. So a pivot point is where a price touches a line and then turns around from that. They say 3 touches make a trend, and we have obviously, well, 1, 2, 3, 4 now. So this is a clear downtrend, but what is something that is very interesting is the support line. So if we just run a support line along here, so remember this is an art, this is rough, and I'm not putting this exactly perfect because we're looking at the 1 day chart. It's a zoomed out area, and there's a reason why, if we're talking long term, humans are better than robots, because this is more of an art form and not a science. We can see clearly that we have a strong support level that is meeting a clear downtrend. We can also see down the bottom here that we have our time frame, and this goes all the way to the start of the descending triangle. So because a good technician focuses on statistics and probabilities, I will now lay out the statistics and probabilities for you of a descending triangle. So here we have some statistics from the Encyclopedia of Chart Patterns, very famous book, the 3rd edition from Thomas Bulkowski. And we're talking about descending triangle patterns here. So I will continue to read this. Out of 375 test samples from the Encyclopedia of Chart Patterns on descending triangles in bear markets, which is what we're in, 58% chance to break to the downside, 42% chance to break to the upside, 53% chance the downside breakout continues, and 47% chance the downside breakout reverses, moves back in, and then resets. If the descending triangle breaks to the upside, the average rise is 30%. If the descending triangle breaks to the downside, the average fall is 21%. So obviously 58% is not the most compelling odds, but if you're a statistic and probability geek like myself, then 8% is 8%. So as we close out the more unwanted reality of this analysis, where the statistical probabilities do weigh slightly more to the downside in terms of chart patterns and the fact that the trend is down, we see this quote in front of us from Ed, that the trend is your friend until the end when it bends. And when is the end? That is the question that we will be moving into right now. So some of you may remember from previous price action in the cycles, and what was trending was the Wyckoff accumulation and distribution. So price action moves in 3 different cycles. That is distribution. Well, it starts with accumulation, public participation, distribution, and on and on and on and on. This is a Wyckoff accumulation schematic, a very popular one, and it is a phase that looks quite familiar in Bitcoin's price action right now, if you were to ask me. So what we see here is SCAR. We see a high that is met with a sell-off. We see a lower low where we take out some liquidity under the underside, and then we follow into some accumulation. If we look here and we're talking about candle closes, we see a low and a close. We see the highs that were made, the sell-off, and then ST in phase B. So one could argue quite well that that is very, very similar. So price action is very interesting at the moment, and we will soon find out whether we are in ST and phase B. For those that are looking for more answers on the shorter term, if we zoom in to the 1 hour chart, we can see clearly that we have a range. This is a price range, and we can clarify that price range by dragging to the candle closes of the range. So if we go like this and then pull it down to the candle closes of the bottom side of the range, we can see that we are stuck basically in the middle of the range. For me personally, it is shorts in the yellow, longs in the green, while there is a tradable range. But we are not as interested in short-term analysis for the purpose of this video, because we do have a contracting shorter-term range prior to expansive resolution, and we are looking for candle closures of 4 hours or above outside these areas here for a bias on direction. But until the range gets broken by larger term candle closures, resolutions, we will just continue to trade the range as it is, which is expecting it to continue until the one time that it doesn't. You may be right 10 times, you may be wrong once. They are good numbers. Now for the final segment of this video, where I'd like to show you a couple of things. This is the Kingfisher liquidity map. You can see we're using the BTC USD pair as well. This shows where derivative traders would get liquidated if the price went in that direction. So we can see here there are some large liquidity clusters, both to the downside and the upside, but there are some extremely large liquidity clusters that are moving the liquidation prices from 2.2 billion, all the way up to 4 billion. So nearly $2 billion worth of liquidations would occur if the Bitcoin price moved to the 27K, 28K area. And we do have a saying at Blockchain Bulls, what would take the most amount of money from the most amount of people has the highest probability of occurring eventually. Now I'd like to close our video with a clip from Raoul Pal. He is a touted and trusted macro investor, very well known in the space. He is the face of Real Vision, and he comes with some pointers, some alpha.
The things many people ask me is, why, if you think there's a big recession coming, why are you bullish on markets overall? That's a bit complicated, but really it's about the forward-looking expectations of markets. You see, the market's job is not to look around them today and go, well, things look pretty bad, so let's be really bad. Their job is to look forward. Now, don't forget, many of these markets have priced in a recession. And so therefore, anything that's looking like the change is going to come is going to cause the markets to turn around. What kind of change am I talking about? I'm talking about the Fed not raising rates much further. And again, we're looking out, the markets will look at 6 months, maybe even longer, maybe a year. And they'll say, listen, the Fed probably aren't going to go much beyond, another 75 basis points or 100 basis points. So therefore, we can start breathing easily because things are going to change. Also, if the economy is weakening, then in the future, the Federal Reserve always, when the economy weakens, end up stimulating. So that's why I start to look at prices like equities and crypto and say, maybe they've bottomed. As I said, it's not a certainty, but I kind of feel like it's around here. Maybe it's a one spike lower, but I think that the bottoming process is in place, and over the next 6 months, we'll see much stronger asset prices as the economy weakens. And people say, but we're in recession. The stock market should be collapsing. They've already done their work. So that's how I see things. There are no certainties in this world. Let's see how it plays out.
So you may have noticed in that clip that Raoul Pal reiterates the fact that markets are forward-looking, about 6 months to 1 year. And we can see here, just to cross-reference that statement, an article from Forbes talking about the stock market is forward-looking. Here's an important reminder to keep in mind when you think about the stock market. The market itself is approximately 6 months forward-looking. That's from Forbes. Now we piece two pieces of the puzzle together from a CNBC Fed survey. The Fed is now expected to keep raising rates, then hold them there, CNBC survey shows. The central bank is forecast to keep hiking until the rate peaks in March 2023 at 4.26%. So October, November, December, January, February, March. That's 6 months ahead. If we are looking 6 months ahead and the market wants to see the rates peak before it turns around and starts heading up, and we're 6 months forward looking, and this is forecast to occur in 6 months, maybe we can put two and two things together. I hope you've really enjoyed this video.